Morning, Steve Reed in Chicago with the morning grain comments. Well, we've got grain prices a little bit lower. We continue to see a higher dollar, lower crude prices, and that might be weighing on commodity prices. Also, it seems like the financial markets are on hold until they hear what the Fed chairman says on Friday about interest rates and whether or not they have enough ammunition to raise U.S. interest rates down the road. As far as the grains are concerned, not too much as far as new news. The weather's okay for the Midwest. This pro-farmer tour as it moves across the Midwest going into Nebraska and Indiana. The Nebraska corn yield was found a little bit lower than what they were looking for, while the Indiana corn yield was above the average, but still the average was below what the USDA is saying. Soybean pod counts, though, are coming out above average and maybe above normal, which could suggest the USDA could raise the final bean yield given this good August weather. Other than that, we saw that Jan-July soybean imports into China is up about 4% from a year ago at 43 million tons. We also noted that talk of slower domestic meal demand may be slowing the crush, which is reducing the supply of soybean oil, and maybe one of the reasons why we've had a 5-cent rally in soybean oil since the lows. We've also noted that as far as weather is concerned, we're starting to see some models that take a hurricane out of the Atlantic and pushes it right up into the Gulf of Mexico and into Louisiana. One map shows heavy rains for Louisiana, and the other one maps who don't have a hurricane still shows heavy rains into that Louisiana area down the road. So the flooding that's going on down there could get worse, and then we have to kind of watch and see if that disrupts loading of vessels of corn and beans, and whether or not that's bullish or bearish. If it happens, if that hurricane does hit that area, that could slow harvest down there and could raise concern about final production of the corn, beans, and even the rice in that area. So we're going to have to watch that. That's kind of a new wrinkle that we're not expecting this time of year as the harvest nears in the southern part of the area. Funds yesterday sold beans, meal, and corn and wheat. Wheat making new contract lows overnight. They bought a little bit of oil. So they continue to be long beans, meal, and oil, and short corn and wheat. So we got to be watching long-term weather. Got to be watching the Fed comments on Friday. This is the time of year when we have a pretty choppy trade. I still think beans are in a trading range between 9.25 and 11. Maybe see some more weakness going into harvest. Corn maybe in a 310, 380 range. So we're kind of at the lower end of that range. So I wouldn't be a seller here. And I think we'll have a bounce in prices after our harvest. So we'll see how all that unfolds. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.